Ben, thanks for being here. Thanks for doing this today. And Ben Forman, the CEO and founder of ParaFi Capital, and coming off of the day prior, yesterday, we were at the first annual, or it was the first annual ParaFi Investor Day, which was just fantastic. CEOs from some of the top protocols and founders from some of the top crypto companies, and also LPs and investors, which was just a fantastic time. I want to talk a little bit about that and how great it was to bring all these folks together after 6+ years running ParaFi. But why don't, if you don't mind, let's get started with a little bit about your background and especially your experience at KKR and the credibility that brings to ParaFi.
Yeah, definitely. This is great. I'm excited to dive into this. So a little bit of background. I mean, I spent the first 10 years of my career on Wall Street in kind of buy-side investing roles, private equity, credit, always loved investing up and down the capital structure. So understanding debt, understanding public equity markets, private equity markets, how they're interconnected. And so it kind of touched and did a lot over that time frame. And I always appreciated kind of the challenge of learning new investment strategies and new asset classes because they're all idiosyncratic. And along that journey, I got introduced to crypto, and it was always something that was at first a hobby, but kind of increasingly became a bigger and bigger part of my life as I learned more about it. So I was at TPG in 2015, and I had a roommate at the time in San Francisco who was an engineer at Google. And we were having a dinner party at our apartment, and he, said, "Hey, have you heard of Bitcoin?" And I said, "Yeah, I've kind of heard about it." And he's like, "You need to read the Satoshi white paper." So I read the Satoshi white paper a couple times to really understand it. And what was interesting about that process was, just understanding what money is. Was something that, despite working in finance my whole career, I never really asked myself what money is and how money works. And going through that learning process was exciting to me. And so with Bitcoin, this idea of money on the internet, the ability to transfer value from party A to party B without any intermediary sitting in between was very powerful. And then also having a type of money that has a hard capped supply was also kind of very intriguing to me. And that process of learning that money is really a technology that humans use to communicate value with one another, and that technology has gone from beads to cowrie shells to precious metals to pieces of paper backed by precious metals when we were on the gold standard, to then pieces of paper backed by the good faith of the government, to now mostly digital money. It's no longer really pieces of paper. Only 13% of all the money supply is actually coins and bills. The other 87% is are ones and zeros. But just really understanding that we've wrapped different skins around the concept of money over the course of civilization. And for me, Bitcoin was just the best skin I had seen because it had all these very unique characteristics. So I ended up investing in Bitcoin. And I think the best way to learn about something is actually you end up investing and then you start paying attention to the price. So this was back in 2014 was when I first bought. And this was at the end of a Bitcoin bull market. So the price was drifting down. And so actually in hindsight was not great timing. I ended up kind of paying closer and closer attention. I would go to the Coinbase cafeteria when it was a Series B company and kind of have lunch and talk to people.
Because you're on the West Coast at that
I was in San Francisco. Yeah. So, I through that process, I kind of came across Ethereum. And Ethereum was the second token listed on Coinbase. And that kind of opened up what you could do with blockchains because you could make them more expressive, able to execute logic. That led me to decentralized finance, which then, eventually really got me thinking that this technology and asset class is actually much bigger than just Bitcoin, and it's only going to grow and only going to become much larger. Actually, at that point in time, I was asked by KKR to lead research in the blockchain space. So I was the head of what KKR called the Innovation and Disruption Council.
Kind of internally there, figuring it out.
Exactly. And because KKR as a firm wants to kind of stay one to two steps ahead of all the biggest secular technology trends globally, whether it's artificial intelligence, autonomous driving, robotics. Blockchain was kind of one vertical. And so I was the blockchain lead across the firm. And back in 2015, 2016, when people looked at blockchain, they actually saw it mostly as a payments technology. And KKR's largest portfolio company across the entire firm was First Data, which is since renamed to Fiserv, and it's the largest credit card processor globally. So there was concern like, hey, maybe Bitcoin could disrupt the legacy payment rails. In retrospect, Bitcoin is not really used for payments. We now have stablecoins, but at the time, KKR was wondering, hey, is this a risk to First Data? Could this be an opportunity for First Data? So I was doing some work there.
Sure.
And I got to a point at the end of 2017 as the space was kind of blossoming and growing where I realized that I really wanted to spend all of my time focusing on this new asset class because the volatility and the excitement and it just felt like a new frontier to me. It felt like something brand new. It's rare to live through the inception of a new asset class. And so I looked at maybe building something internally within KKR, but KKR is such a large and successful firm. They have to take bigger bets. And at the time, crypto was small. And so I ended up making the decision to leave the firm to start ParaFi. I made the decision at the end of 2017 and ultimately left in the first part of 2018 and really set out to build an investment firm focused on this new asset class and this new technology. And at the time, the space was much smaller, but it was clear that there were going to be a growing number of different digital assets that would be investable, as well as companies in the space building applications, tools, using the technology of blockchain to either make their business more efficient or to enable other businesses to kind of access on-chain services. And I thought that was exciting. So I took the leap, and it's definitely been like a nonlinear journey since then. But I think having the background of looking and doing deep kind of fundamental diligence on companies at KKR, whether that's in public markets or sitting in the boardroom of very large businesses, knowing the challenges that businesses encounter, understanding unit economics, understanding market structure, a lot of those lessons can be mapped and applied to investing in digital asset markets. You also have to unlearn some things too. So you have to kind of approach things from first principle and have more of an open mind. And it's a different sport, but there are some skills that do map over that I found very useful. And that was really the start of the journey.
Yeah. So going back to that time, so you launched ParaFi in 2018, I launched Gondola in 2019. We met around that time, and we were just talking about this before the recording started, but we recorded our first podcast together in 2020, right in the heart of COVID, and I'm in my living room, you were somewhere, and here we are today, several years later in a studio having this discussion, and it's really nice, and it's also great because we mentioned Investor Day, which was yesterday, and after 6+ years of really living the vision that you had back then, day in and day out, to get to where ParaFi is now, I thought yesterday, being an investor day, one, I was just very grateful. It was a great honor to be in that room after everything that's kind of taken place, and just looking at you and the ParaFi team at times and kind of taking it in. It felt really nice that like you guys have made it to where you are, and had all of those people there for you and for what you've built. And it was quite special to see, and the caliber of content, the folks that were there, was just fantastic. So you think about where we were and where we are and where we're going, it's quite special.
Yeah, I mean, it's interesting because I think the investment business is a business of trust. And if you think about fundamentally like what we do, we have investors that trust us as fiduciaries and stewards of their capital. And then we have founders that we then partner with who trust us enough to let us onto their cap table. So we're kind of in the middle of the supply chain of trust. So I think yesterday's event was a bit surreal, and just to have our founders and investors just mixing in the same room and knowing that, we kind of sit between them was amazing. But yeah, you're absolutely right. I mean, I think for investment firms overall, like I think the one thing that has really helped us on this journey is like we've always taken a long-term view. And there's a lot of short-termism in crypto, and people that want to make money on a 1 hour time frame, 1 day time frame, 1 year time frame. But there are very few people that I think are firms that had the patience to really think long-term and maybe make decisions that, were one step back, 2 steps forward. So yeah, I mean, and then it takes a lot of luck as well to,
Yeah, you make a great point, because like this space moves faster than anything I've ever been involved in, and it's really difficult to keep up and to separate signal from noise. And one thing ParaFi has done a great job of is when we first started talking in 2019 and working together, the ParaFi Digital Opportunities Fund launched with a focus on DeFi. 2018, folks may have said, man, that's a tough start, but by 2020, the vision, the thesis played out quite well with DeFi Summer, and the returns of the fund were just fantastic. And over time, these narratives in crypto shift a bit. So PDO isn't a dedicated DeFi fund as it sits today, but ParaFi's been able to sort of evolve and address opportunities across the spectrum of the space in really like a nimble way. So how do you guys, in a rapidly evolving space, how do you adapt?
Yeah, I think flexibility is paramount to any strategy in crypto, because crypto changes very quickly. And we also attach labels to narratives. As an example, DeFi, we ended up making a lot of investments at the intersection of, finance and blockchains and what was possible, what was possible there. But and people labeled that DeFi. But I think the reality is the category is so much bigger than that. We've always kind of focused on areas of product market fit on chain. So what are the things happening on blockchains that are actually real use cases that are improving an experience in traditional finance or on the internet, and making it 10x better, faster, cheaper, reducing risk, making it more convenient. If that's kind of your North Star, you end up investing in really interesting things. So that's what led us to DeFi originally, because DeFi was one of the few areas that people were actually using. Most of the other areas of the blockchain space were more theoretical. So actually at that point in time in 2019, 2020, DeFi, it was really Bitcoin as a store of value and DeFi.
Yeah.
And there wasn't much else going on. But over the past 4 years, since we recorded that podcast, it's not just DeFi. There's now a very broad range of different real use cases happening on chain, whether it's prediction markets or DePIN or tokenized real world assets, or just the growth of stablecoins used in payments, whether it's decentralized social like Farcaster. whether it's the intersection of AI and crypto, there are maybe 15 to 25 different sub verticals just at the application layer that are fascinating and that have real users. So there's more to do now than there was then, but we were focused on DeFi because it was just the only real pragmatic thing happening in the space.
Yeah, it makes all the sense in the world. And as it stands today, there's about 170, 180 billion in stablecoins. So from 10 billion 4 years to 170, 180 billion, kind of right. That's a big increase. So thinking about stablecoins, how has that growth impacted both the crypto space, what ParaFi does, and traditional finance, like just traditional finance?
Yeah, I mean, stablecoins are, you can not believe in anything in crypto. You can dismiss Bitcoin or other use cases, but stablecoins are tough to deny. I mean, it's very powerful to be able to move a dollar on the internet. Basically instantly, basically for free, without any intermediaries between you and a recipient. So whether it's kind of cross-border remittance, B2B payments, we actually pay invoices using stablecoins at ParaFi. We fund deals using stablecoins. And now, I mean, it's not just crypto native. I mean, you're seeing, whether it's Visa, Stripe, MasterCard, whether you look in emerging markets, whether you look at the big banks, I mean, stable coins are, now ubiquitous. So I'm a big kind of numbers guy. So yeah, 170 billion of stablecoins on chain, 27 million monthly active users. These numbers are compounding at, depending on how you look at it, like kind of 50 to 100% year over year. What's even more impressive about the growth is stablecoins are a 0% yielding asset. And we've been in a 5% short-term rate environment. So anyone that's holding stablecoins on chain, unless they're using DeFi to earn a yield, is effectively foregoing a yield to own a zero yield asset on a blockchain. So by definition, it's had that headwind, but it's still grown despite that headwind.
Sure.
Now in a more dovish monetary environment, I think you're going to see stablecoin grow meaningfully. We actually said yesterday at our investor day that we think stablecoins will converge towards 10% of the U.S. monetary base by the end of the decade. That may be conservative. But why is this important? Well, stablecoins are, in many ways, like the substrate for all activity in the space. So if you're paying a creator for an NFT, if you are making a payment on chain, if you're using decentralized finance protocols, all of those, or if you're involved with a DPIN network and you're paying for some service, all of those on-chain services really tie back to stablecoins.
Yeah.
So as the GDP of blockchains grows over time, stablecoin supply will grow along with it. And so that's why I think it's just a very important part of the space. It's almost like an indexed bet on blockchains growing in use.
Yeah, and Coinbase has made a huge push recently with USDC and stablecoins, and with coffee shops. I was at a couple events held by Coinbase, and being able to buy a Coinbase hat on site with one tap with your cell phone using USDC and Coinbase Wallet. It made me start to realize, I'm like, okay, we're so close to the Apple Pay experience. Like it's
Right.
there. It's like tap, couple clicks, face, and I just used USDC on chain, and I got a product for it, and that's just, it's so cool. It's just so cool to see.
It's so cool, and look, like we can appreciate it, even though we can use Venmo, and it's also, Venmo would also be useful in most contexts. But if you're in an emerging market, and you don't have dollar access, or great banking rails, it's not like a nice to have. It's actually like a need to have. It's almost a 10x upgrade.
And a lot of the growth for stablecoins is coming outside of the U.S. right now.
Absolutely, yeah. I mean, in whether it's we're seeing actually a lot of growth in emerging markets.
Yeah.
So in South America,
Yeah.
Argentina, Brazil, countries with high inflation rates,
Yeah.
Southeast Asia, Sub-Saharan Africa. There's a great chart that shows transfers of stablecoins on chain and correlates it to different times of day. And what we're seeing is, particularly in Africa, there's a huge uptick during kind of during kind of core business hours of stablecoin use, and then at night it fades.
Yeah. It's so interesting because I think we get so caught on just what happens here in the States, but crypto is global, it's borderless, it's permissionless across the world, and it's part of the beauty. And yeah, just very, very cool to see that growth. Why don't we get into a little bit about like ParaFi's edge and how you guys have been like able to continually outperform both just broader crypto, if you're looking at just Bitcoin, ETH, sort of the Bitcoin beta or crypto beta per se, how you guys have continued to keep that edge. And there's, I think, an informational edge, a technological edge. And you recently launched or formally launched ParaFi Technologies. And ParaFi has always been a technology firm, but kind of crystallizing that in with ParaFi Technologies and what you're doing there. And what I learned yesterday, and I learned more about, is how important that is to your success with what you do at ParaFi, and not just your success, but like the edge that you get, and how it's probably going to be tough for others to come in and replicate that. You have a really kind of a head start.
Yeah, I think one of the ways that we've architected the firm is we want to touch like different parts of the ecosystem, because it gives us variant perception and allows us to see situations from different angles. So a lot of investors in the crypto space are just a venture fund, or they're just a liquid hedge fund that does arbitrage, or they're just focused on growth stage opportunities. So we designed the firm to kind of span the full gamut of different liquidity profiles and time horizons in the space. So this means that, in the morning we may be in a board meeting with Fireblocks, consensus, understanding what, how institutions are adopting blockchains, or what's happening with account abstraction or different technologies that are making wallets better. And then in the afternoon, we may be on the phone with an early stage DPIN founder who wants to, we can kind of draw those insights and apply them to looking at early stage opportunities or looking at liquid tokens, because it allows us to, similar to the traditional hedge fund space, you've seen hedge funds that have traditionally been public market investors, but then made private investments, use the data from privates and applied that insight to public markets, and that drives alpha. So we see that similar dynamic in the crypto space. So we have, really kind of three core strategies. We have ParaFi Digital Opportunities that invests in tokens. We have ParaFi Quant Strategies that does non-directional, more arbitrage-related opportunities with shorter time frames. That can include crypto-linked equities or spot crypto. And then we have our venture fund that invests in private companies over a 5 to 10 year kind of time horizon. It's great because we kind of see everything going on in the space. So we have that information edge, allows us to kind of see around corners. I think being able to look even 10, 20% further out than the average investor in crypto, you can really learn a lot. You can get ahead of trends, given how fast the space moves. The other important thing is using the technology.
Yes.
So we were like playing around with the DeFi apps early, and that the light bulb went off like, wow, these are fast, efficient. We own the assets directly in our wallet. This is very, very powerful. And also we think it's a lot less risky than just, a lot of activities in traditional finance. And I think one of the misnomers in crypto is, FTX, you had FTX, you had BlockFi, you had all these like kind of big public failures. Those weren't actually DeFi or at the protocol level. Those were companies that mismanaged risk.
Centralized entities that mismanage risk, yeah.
Exactly.
Yeah.
And so we developed these insights just through using the products. And then through using the products, we were able to understand which ones were good and which ones weren't good, or understand the flaws. Then when we got on the phone with founders to talk to them about what they're building, we could actually speak to them and compare and contrast what they were building to other protocols we used and bring them really relevant insights, which made them want us on their cap table, which further credentialized us, and we got on this flywheel. So we're users of the product, and over time, the evolution of that was there was a lot to actually build and use in the space. We started ParaFi Technologies, which is almost like a labs entity within ParaFi that runs alongside our investment advisor, where we're running validators on different proof of stake networks, writing smart contracts, and playing around with this technology, and kind of letting our curiosity wander. But we also are commercializing parts of it. That's been powerful because, I mean, you just have to use this stuff to get smart on it.
Yeah.
It's like, imagine investing in the internet and never opening up like a web browser.
And never logging into AOL in the early days.
Exactly. It'd be unthinkable. Yeah. So, but in this space, like, there's so many different apps that you can use. And then finally, as part of that, I mean, we're even tokenizing a sleeve of our latest venture fund too. You've seen, KKR, BlackRock, Hamilton Lane.
Securitize.
And we're doing it through Securitize. Yeah. So we want to, kind of eat our own cooking. Like, we've invested in a lot of tokenization infrastructure. If we're not using it ourselves to make our business better, we're probably not learning or staying on the cutting edge. So it all comes back to, like, you really want to be a user of these products, and you want to touch different parts of the ecosystem. And if you have that scale as a platform, I truly believe it gives us an edge, because we're not just in one corner of the space. We really have the full picture.
Yeah, so that's information, technological edge, but there's something else that you were alluding to during that, is the ability to get on cap tables of some of the best protocols and be able to partner with some of the best founders in the space. And ParaFi has seemingly had an unfair advantage in this in some way. I mean, the earliest to some of the best DeFi protocols that still exist today and still kind of dominate the space. Early to, and we'll get into this, but Polymarket, and another thing that you mentioned several years ago is, quote unquote, I think prediction markets have been left for dead, is what you said years ago. But here's our thesis why. And I want to get into that later. But ParaFi has just been early to a lot of the most incredible things that have been built in this space. Like, how are you first call with some of these founders? And I think you alluded to some of your users, but how does that flywheel work?
Yeah, so I think that we're in a small industry, and, like, reputation is paramount. So I think, like, the North Star has got to be doing right by the founders in our portfolio, because founders talk to other founders. And in venture, like, the model could be, and I think Fred Wilson at Union Square Venture said this, the LPs are the shareholders, but the founders are the customers. So you very much have to be at the service of founders. So whether it's breaking away on a weekend because there's an emergency at a company and you need to be on an all hands, or if a founder's going through a tough time, maybe not finding product market fit, just being there for them, being their first call. I think establishing that open, honest, direct dialogue with founders. I think a lot of founders think they need to, like, paint a rosy picture for investors because they want the investor to keep on investing. But it almost takes, like, that maturity from a founder, and just to have that open relationship for them to be comfortable coming to you when things aren't going well.
Yeah.
It all comes back to, you want to have very high net promoter scores, ratings with your founders. So we actually survey our founders every year and ask them to rank us on a scale from 1 to 10, rank ParaFi in terms of how helpful we've been across different metrics. We want to know how we're doing and how we can improve. This gets back to your question, how do we get on cap tables? Well, we want our existing founders to be happy, put in a good word reference for us with future founders. That's a big part of it. Now, I think that's how things started. Now I think ParaFi's reputation is very strong, where, we generally win allocations in the deals we want win allocations in, but we have to keep the bar very high with how we treat founders. I think there's kind of one other component to this, which is we have around 50 different blockchain founders and CEOs who are actually LPs in ParaFi and who have said, hey, any deal you do, put me in for X, right? Put me in for 50K, 100K. A lot of the founders are angel investors. So we're able to approach teams and say, an early stage founder say, not only will you have ParaFi lead your deal, but we're also going to bring in founders XYZ, and they'll be on your cap table day one, and that gives you a big advantage. And your cap table matters a lot in crypto, right? Because it's a huge credentialization, and a lot of these crypto founders are fighting for eyeballs and dollars and activity. So that has been a big part of the flywheel.
So everyone wants to talk about the Bitcoin ETFs and crypto ETFs and ETH launch. So 2024, this was just a tremendous year, seeing the Bitcoin ETF launch in February. Hunter Horsley, a friend of yours and a friend of ParaFi's, was at the Investor Day yesterday, and he talked about 950 RIAs or advisors are now allocating, but there's 300,000 out there. So we're still early. And with that, it was still the most successful ETF launch in history, and not just by a little bit, but by leaps and bounds, like not even close. So we work with RIAs all the time, and several of them are beginning to allocate to the Bitcoin ETF. And actually, it's funny because several of them are folks that we talked to in 2020. They're like, we'll never touch crypto. And now they're using the ETF. And some of those same firms have actually already invested in ParaFi several years later. I wish they would have did it earlier. But what we're seeing now is this sort of adoption wave within private wealth. There's 30 trillion in assets out there. And we're seeing this adoption wave of the Bitcoin ETFs. So talk a little bit about, just from a portfolio construction standpoint, because you think, okay, Bitcoin ETF is passive exposure to crypto. You're going to get Bitcoin beta, and perhaps even we can call it crypto beta maybe. Logically, I think what ends up happening is you get adoption, almost it's like a Trojan horse in a way. You get adoption, people get orange pilled, quote unquote, to Bitcoin, or advisors from an allocation standpoint. And then they start thinking, well, what else is in the space? What else is out there? Is it just Bitcoin? And how do you view sort of like active management crypto, institutionally, like active management, like what you do in PDO, or even the quant strategy, or even the venture side, active management? How do you view that potentially pairing with a passive allocation to crypto? I logically think that that's what will happen, but how do you think about that?
Yeah, I mean, a natural like segmentation would be to say, owning your Bitcoin ETF is beta, and owning anything outside of that is, as you go further down the curve is alpha. But maybe that's not a perfect analogy, because if you think about crypto markets, they're 2.3 trillion. Bitcoin's roughly 55 to 60% of that. So it's like the largest asset. But it's quite different from everything else in the long tail. So Bitcoin's future returns could look very different from Ethereum's future returns, which could look very different from Solana's future returns, which could look very different from the long tail of tokens. And so, everyone lumps digital assets into the same category. But Bitcoin's trying to be a store, like really is valued as this macroeconomic asset, a store of value, whereas Ethereum is a smart contract platform versus things at the application layer are aiming to do other things. They're all digital assets, and that's about all they have in common. It would be like thinking about Amazon versus like U.S. Treasuries. They're just very different, but people lump them together. The way I view it is, I think Bitcoin is a very different bet than a lot of other things in the space. So it's one asset. It's not necessarily, Bitcoin won't necessarily have the beta of coins number 2 through 15,000 that are listed.
Yeah.
I think Bitcoin is a very interesting, fascinating asset, is a interesting monetary hedge. will grow in value meaningfully. But it covers only a very small spectrum of this new technology. So I think it makes a lot of sense for clients to have some passive Bitcoin exposure in their portfolio. And by the way, I personally believe it's a buy and hold investment. I wouldn't try to trade it or time the market. But if you're just buying Bitcoin, you're only like kind of looking at one really small component of this technology. There's a whole ocean of other things that are happening that I think will end up being much, much bigger than just Bitcoin. And there's a lot of alpha there. There's a lot of different things going on. And that's really where a lot of the innovation is. There is innovation on Bitcoin, but I would say sub 10% of all the developer activity and venture funding is going into Bitcoin.
Yeah, I mean, A16Z did their State of Crypto report. I think it was released last night, and it talked about builders across chain. And Bitcoin has seen a little bit of an uptick, probably due to ordinals and runes and some of the things that are going on there. But Solana, ETH are at a trajectory with builders that's just a little bit different, a little bit higher of a trajectory.
Yeah, exactly. I mean, all of the corporates, whether it's like BlackRock issuing tokenized treasuries, whether it's Sony, the music company, starting their own layer 2, all these activities are happening on smart contract platforms. Which smart contract platform will win? Which pieces of infrastructure will accrue value? Which applications will accrue value? First of all, there's that whole theme. I mean, Bitcoin, this whole theme could take off, like of building applications on blockchains, through using smart contracts, and Bitcoin could go to zero. So if you just have exposure to Bitcoin, you're almost neglecting this whole other world.
Yeah.
There's a lot of alpha in that space because of how dynamic things are. The lack of consensus around what the right valuation methodologies there are for tokens, particularly at the infrastructure layer. And there are so many different projects that there's a meaningful amount of return dispersion. So the difference between owning the top quartile asset and the median asset is dramatic.
Yeah.
So asset selection is paramount, which makes then manager selection paramount as well. So yeah, there's this opportunity. There's a lot of alpha. It's very early, and it's very different than just like owning Bitcoin.
Yeah, really good points. So let's go back to your conviction in prediction markets going back years. And so we touched on how big the ETFs were for crypto earlier this year in 2024. And Bitcoin was somewhat expected. We got maybe a little bit of a surprise with ETH for some folks. But there's been a breakout sort of app in not just crypto, just a breakout app. Let's just call it that. I mean, when you're this morning, the CEO of Polymarket, Shane, tweeted out a #1 news app in the Apple iStore. So let's not even say the number, like a breakout crypto app. This is a breakout app that happens to, there's some crypto components to it. They use blockchain.
That's the key, by the way, is the best crypto applications don't lead with crypto.
Yeah.
Crypto's on the back end,
Yeah.
right? Whether it's a fintech product or a social media network like Farcaster, it doesn't have to lead with crypto. It's just a social media app. It's just a news app. Yeah. Now, on the back end, it's powered with crypto, but we don't say this is in, we don't describe things based on the infrastructure they're built on. We describe them for what they actually do.
Yeah, it's like, I'm just thinking about, so my mom's on Instagram and we share photos and family pictures, and when I talked to my mom, she said, "Oh, those are great pictures." And I was like, "Man, that was great. This is powered by Python on the back end." I really love Instagram.
Yeah,
like,
exactly.
It's just not there. So, but yeah, so Polymarket, your conviction goes back years, and back to the quote that I mentioned before. Going back and listening, one of the things that you said at one point was prediction markets have been left for dead. But you talked about the TAM being in quadrillions, I think was the number you threw out there, and the derivatives market. So talk about Polymarket breakout app of the year that happens to also use crypto, and your conviction early, and then also not only the patience, but to wait to see this thesis play out like it is now, but also like the conviction to continually double down along the way, even while prediction markets were still considered perhaps left for dead. I mean, you didn't just make a single investment. You continue to kind of double down on that thesis and perhaps re-underwrite it as time has went on. And now we sit here today with Breakout app with a couple $1 billion in volume on the election. I think they did $1 billion in volume, like maybe just this month. Up to this point, more.
Yeah, it's like 1.3 billion this month so far, across their markets.
Yeah, how did you know?
120,000 users or wallets over the past month. So yeah, just maybe I'll just quickly share what a prediction market is. Is that so? See, a prediction market is basically a market where you can buy shares in the outcome of an event. So if that event occurs, you get paid, let's just say 1. And if that event does not occur, you lose your principal. So you may buy, will Trump win the election? You may buy that at 60 cents. If that occurs, you get $1, so you make 40 cents of profit. If that doesn't occur, you lose your 60 cents. Now, this technology can be applied, or these markets can be not only for politics, not only for sports or culture or weather, or they can be applied to anything. They can be used for insurance. You can create a market that says, will there be a Category 5 or above hurricane on the Gulf Coast over the next year? If you can't get insurance on your home, you could create that market. You could bet on yes, and someone could then take the other side and bet on no. And if it doesn't happen, well, you lose what you've invested.
And there are speculators that perhaps interested in these types of markets.
Exactly. It's basically real-time pricing of risk on anything. And now what's really interesting here is these market prices tend to be a signal for the actual probability of an event occurring. Because when there's actual money on the line, the price of an event can be higher fidelity signal than a poll, because there are biases in polls or surveys. And so market prices are really valuable insights into the probability of an event occurring. And one interesting insight here, there's a bunch of interesting anecdotes around these things, but one in particular was during Biden's debate with Trump, where he kind of wavered a bit. You could go onto Polymarket, and there was a market, who will win the presidential election, Trump or Biden. And in real time, because these markets are 24/7, and we'll talk about I'll kind of trace back in a sec, because I realize we're on a tangent. But in real time, as he made good points, people were buying Biden. As he stumbled, people were selling Biden. And instead of, turning on MSNBC or CNN or Fox after the debate to find out who they thought won the debate, instead of listening to the talking heads, you could literally just look at the raw data.
Priced in real time.
And because there are real dollars on the line, you should converge towards true probability. Because as an example, if someone's really if odds are meaningfully mispriced, someone can come on and place a positive expected value bet and have an edge.
Especially in a market like the election, which is probably more efficient than maybe some more esoteric markets. Like if it's that drastically mispriced, there will be folks that come in on the other side and kind of take
Exactly. That's the hypothesis. And maybe there are marginal biases overall in these markets. Like you could argue, are there more, do people that are people that like to place bets more likely to be Republicans versus Democrats, or are like in the context of Polymarket, are crypto users more likely to be Republicans or Democrats? Maybe there's some inherent biases there. The other side of that argument is if there was a bias in the market, like for example, let's say Trump's at 60% on Polymarket, but in reality, his odds are only 40%. Kamala is actually at 60. So someone could come on to Polymarket today and bet on Kamala and bet at 40 cents when the true odds were at 60. And that would be a very positive EV bet. So even if there are biases, because money is involved, it presents an opportunity for an arbitrager to kind of come in and step in and make positive EV bets. So the long story short is, this is a global, so what is Polymarket? And then I'll run. It's a global 24/7, always on marketplace on the internet, where anyone with an internet connection and stablecoins can take a view on any of the markets on their platform. So today there are, 300-400 different markets on Polymarket. When will GPT-5 be released? Will, Elon Musk be the CEO of Tesla by the end of 2025? Who will win the Venezuelan election? Who will, become the next mayor of Tucson, Arizona? Will Iran attack Israel by the end of the year?
Will Taylor Swift kiss Travis Kelce at the end of the Super Bowl? I mean, that was one that got a ton of exposure.
Exactly. Yeah. I mean, so it's like everything that these are markets that some of them are like silly betting markets, which actually has a big TAM. But then some of them are also like really serious markets where people are doing a lot of research and there's real price discovery and work. And just as an example, there are some weather markets. So will the Earth's, what will be the average Earth temperature in, 2025 calendar year globally? And they'll cite the source. And you'll have, the way I envision what this looks like many years from now is you'll have different think tanks or meteorologists who are making markets on this in real time. They're doing deep research. So it's not like as much retail. It could be very knowledgeable, but it's almost wisdom of the experts.
There's sophisticated players that are on this platform, and there's also folks that want to bet on Travis Kelce and Taylor Swift in the Super Bowl.
Right. Yeah. And that all provides really, really valuable information on what the truth is, or what the true odds are. If you have people competing, betting millions of dollars on, will there be a hurricane on the Gulf Coast of Florida for Category 5 or above by the end of 2024, and it's priced at 20% or 25%, that information becomes very useful, maybe to insurance companies, maybe to people buying homes there. And so
even reinsurance, you could actually, the insurance company can take positions in these markets as well, and kind of rewrite how reinsurance works.
Exactly.
Maybe.
And we've
never even thought about that.
And we've never had this type of information before.
Yeah.
So this type of data before, and it's very useful. Now, prediction markets, people have been betting on elections for over 100 years. Prediction markets have existed for a long time in centralized contexts. The issue is a lot of those have capped betting sizes. So you get more wisdom of the crowds versus wisdom of the experts. And usually, if you think about these platforms, there are power laws. There are people that have differentiated insights that can then express them. There's no concept of insider trading because these are not securities, but someone may have a truly differentiated view on who will, on the outcome of any one of these markets. And so I think that's really, really interesting here. And because this is on the internet, it's on a blockchain, what's different here versus the centralized context is you're not sending your money to a company and taking counterparty risk. You're not taking, you don't have cap bet sizes. Most of those centralized prediction markets are constrained to a specific geography. So it's just the views of the people in the UK or Argentina or the US on a specific topic. But you don't get as good price discovery as if you open that up to the whole world.
Yeah, and the information that's available to the experts or the sophisticated players. You could go to a Dune dashboard, which will aggregate information and pull queries from on-chain. You could pull up every piece of data from the presidential market or any other market, and to me that was that was kind of an eye opener. The understanding. Okay, I understand prediction markets. Then when I stumbled across the Dune dashboard, very similar with Farcaster. When I got to that, I'm like, wow, like social graphs right here for anyone to go in and kind of use how they'd like. Just mind blowing. It's happening. But yeah, so like back to like having that conviction and like how you guys were able to kind of do. Yeah.
And by the way, one other thing on this point is actually it's interesting right now, because if you look at Polymarket, not only do you see, Trump is currently trading at around 60 cents, Kamala at 40, but you can, what's happened recently is the buyers of Trump, because Trump has traded from like 50 cents to 60 cents over the past couple of weeks, have been a couple larger wallets, whereas smaller wallets have bought Kamala. So, the number of wallets that own Trump shares is actually smaller than the number of wallets that own Kamala shares. And then to your point on kind of the social graph, you can run correlations or look at data. So the people that own Trump shares, are they more likely, like what other DeFi tokens do they own in their wallet? Are they more likely to be users of stablecoins, or what is the net worth of that wallet? So like what is the net worth of the wallet net worth of people that own Kamala shares versus Trump shares? Oh, and by the way, what other markets have these people traded on
how
Polymarket?
Successful have they been, or how unsuccessful?
Yeah,
have
how
they
right
been?
or wrong? What have been their track records? So you actually get like this incredible granularity from on-chain data, that openness and transparency that you don't get in traditional prediction markets or any capital markets. Like, you can even look at how long they've owned the Trump share. So at what point have they had this view? Have they de-risked? Because you can trade these in real time. Even with Amazon stock right now, like Amazon has 3 million shareholders, but is there any way for the Amazon CFO, for example, to know, hey, how do I connect to the Amazon shareholders who have held my stock for over 10 years? Like what percentage of those 3 million shareholders have held Amazon for over 5 years, over 10 years? What are their costs? What's their cost basis? What other stocks do they own? So like you can actually see this all on Polymarket. So the social graph and the richness of the blockchain data is like opens up all these interesting radical use cases and insights.
Yeah, what other things are they interested in? Like I mentioned buying a hat at Coinbase's shop with USDC, buying a Coinbase hat, and all of that is on chain. So like there's all this data that can be discerned
you can
from
see
it.
that.
Yeah.
But yeah, back to like how I think with our kind of focus is finding pragmatic use cases for blockchain that can enable applications that are 10x better than their centralized analog. So like there are prediction markets that are centralized, but they have certain issues like the counterparty risk, cap bets, constrained to a certain geography. They're not global, don't have like kind of the composability of on-chain data, et cetera. So Polymarket didn't launch until 2020. We first came across like Augur in 2017, which was like the first attempt at building a prediction market on chain. And it failed. I think it was like an idea that was like too early. You had to bet using ETH. So the value of your bet was volatile in dollar terms. Because there weren't stable coins at the time. Also gas fees, so the cost of placing bets was very high, which made it so if you're betting anything less than $100, $200, like gas as a percentage of your betting volume caused a lot of slippage or leakage. And and also the UX was terrible. So there were a number of reasons why, and we didn't have layer twos at the time. There's just a number of reasons why it was like an idea that was just probably too early. But we were investors in Augur, and we eventually sold our position because it was clear that it wasn't going to work, but it turned us on to this idea of prediction markets. Then we started meeting with every team building prediction markets and finally came across Polymarket. When we came across them, we had the thesis. We invested in Polymarket in 2020.
You had already spent a bunch of time.
We already spent years.
Yeah, years.
Looking at Augur, understanding where it fell short. And when we met with Shane and he was able to articulate his vision for Polymarket, he had also studied Augur and he knew the areas he was going to push to make better. We thought it was, with any startup, there's always a higher probability that it doesn't work out. But we thought that he had enough interesting insights and he had the right ingredients for it to be a positive expected value early stage bet. So we ended up investing, and we just got to know him. And look, Polymarket didn't take off day one. It's been now a 4.5-year journey for him, but he just kept at it for years. One of the great things about this asset class, and also I think venture, where you can drive a lot of alpha, is when you start to see your portfolio companies inflect, because we get like monthly updates, we monitor on-chain data, you can be very preemptive. Like you don't have to wait. In traditional venture, oftentimes you have to wait for a round every 18 to 24 months. Like the company gives you data room access, you analyze it, you make a decision. But here, we actually had, we have Dune, and we can look at on-chain data and analyze how Polymarket was doing. And so in late 2023, we were looking at like a Polymarket dashboard for Dune, and we're like, you know what? Like volumes are actually ticking up. There's a cohort of users that's using this consistently that love it. We're 12 months out from an election. They had just gone through some regulatory settlement with the CFTC, so they had that behind them. They could refocus on the product, and we felt like, and then the company, we knew they could use some extra money to drive growth, and so we kind of preempted and went to them and invested money, and then we invested in Q4 2023, again in Q1 2024, we invested twice, just in our own. We kind of catalyzed around, and then, we'll see. There's some more announcements coming, but I think the insight here is like, if you're early on a theme, you want to meet with like all the different founders building in that category, and find the best one, or maybe the best ones, and partner with multiple people, because some of these categories are large. Like as an example, we invested in both Compound and Aave in kind of decentralized lending. Mm-hmm. So, it's different from traditional venture where like if you're like the lead investor on Uber, you probably couldn't invest in Lyft because you have like board level information. Yeah. But in this space, you can bet on multiple horses in the same category, depending on, particularly in liquid token markets. In privates, it can be a bit more tricky, but at the same time, within prediction markets, I think there are going to be a lot of different types of prediction markets. Some may be geared more towards science, some geared towards politics. There may be some used strictly for insurance, some geared more towards institutional kind of structured products used for hedging, whereas others may be more consumer-like. And so, I would say this to Shane. I think I've said it to him. Like, I don't think Polymarket's going to be the only winner, because this category I think is huge. Yeah. So that's an interesting nuance about just kind of crypto. Like, you identify this theme, you try to meet with as many teams in that category as possible, and maybe you can invest in a few. Yeah. So that's kind of what led us to then investing in Polymarket. This year, it's been the breakout app in crypto, but almost like the breakout app.
Yeah.
No one's this. Shane was mentioning this to me. He kind of put it in perspective. There's been almost zero innovation in traditional news media by Silicon Valley. Like, you still have all the traditional news outlets, like journalism, broadcast media. It's all done in the same way it was done like 20 years ago. There's been a shift toward digital. Maybe there's been a shift towards like more decentralization around like independent reporters on X, et cetera. But this is a company that is disrupting like almost like the truth, or calibrating the truth more. It's giving the world like 2020 vision around what reality is, or what at least the markets say reality is, which I think is often more accurate than what the media may say reality is, or what one expert may say. Yeah. And I think in a world where, we're now at a point where like 30% of Americans do not trust traditional media sources.
Yeah.
Like being able to look at markets as a signal for what the truth is, I think is actually very, very valuable.
Yeah, and seeing the news category on the Apple App Store this morning, waking up to that and seeing Polymarket at #1 above the New York Times. I mean, that is just mind-blowing. It comes 2020 company 4 years later, I mean, #1 in the news category, just mind-blowing.
Right. I mean, the other interesting thing is, and by the way, on that app, like you can just view odds. You can't even place bets.
Yeah.
But it's just people that want to
Information.
consume
Yes.
this information because they truly trust it. And Shane mentioned this during our fireside chat yesterday that Polymarket.com's front end is approaching like 20 million monthly unique visitors, which is about which is about half of Coinbase's volume.
That is incredible.
So there are a couple 100,000 people using betting on Polymarket every month, but there are tens of millions of people like viewing the data.
Yeah.
And now the data's on Bloomberg terminals.
Yeah.
They're striking other data partnerships. I think there'll be other front ends that also tap into the liquidity on Polymarket. So right now you can only bet on Polymarket through the Polymarket.com kind of front end. You connect your wallet, but theoretically anyone could interact with the smart contracts and build other front ends to interact with Polymarket. So if you're making this up, but if you're Robinhood, you could build a front end in your app where people could bet on the Polymarket presidential election
Tap
market.
into those smart contracts, the liquidity that's already there on the, yeah.
Exactly. So Polymarket, the smart contracts may obscure into the background and you may have dozens of different front ends built on top of it. But yeah, I'm struggling to think of another application in crypto that has galvanized this much interest.
Yeah.
Like people that have no interest in crypto use Polymarket
It's the
as
best.
their source
It's
of
really
truth.
great.
Yeah.
It's like the best. It's very, very cool. And have an opportunity to meet Shane yesterday. I mean, just as down to earth and cool as can be, and I got to chat with him for a little bit. Like, wow, it's just as down to earth and kind, and it was fantastic.
Yeah, and it's amazing. So like he's very humble. He's also a killer, in the sense that he wants to. I'm like, hey, Polymarket could be a $10 billion network, and he's like, 10 billion. He's like, things start to get interesting at 100 billion.
That's incredible.
I
love that.
He wants to, he was mentioning this to me yesterday. He calls like Steve Jobs Steve. He just calls him Steve, and he calls Elon. He's like, I'm farther along at 26 than they were.
I love it.
So he just like, you need founders that are like, have just massive ambition because it's so hard. He wants to work on this for the rest of his life.
If you don't irrationally believe in yourself, it's really tough at times. Like you have at times,
right.
I'm like, man, it's just, you just have to.
I mean, you have to be like, you have to just have that like mentality where you are just going to will this into existence.
Yeah.
And, not to like harp too much on this, but so he started the program when he was 22. He's 26 today. He went through, he's gone through a lot. He went through a CFTC investigation. They ended up settling. So they're no longer offering, by the way, all of Polymarket's traction is outside of the US. Yeah. That could change in 20 days. Which would, again, create another leg up in growth.
Yeah.
But anyway, like to go through all of that by 26 and be where he is now, I mean, it's like a very kind of special moment. Elon Musk is tweeting about Polymarket. It is kind of, not only is it like the kind of talk of crypto, but it's also the talk of Silicon Valley right now, like the broader venture space.
Yeah, just incredible. All right, so a lot of folks that maybe aren't as tapped into the industry as you and ParaFi like, well, some of the best returns in crypto, we've kind of missed them, and that's we're gonna pump the brakes and that kind of thing. And I think that couldn't be further from the truth. I think it's almost like day zero in many cases. Like, it's so early. It's kind of cliche. We say that a lot. What are your thoughts on that? And even like bringing it around to like why you were so passionate back in 2018, 19, 20, and your enthusiasm now has never been like the conversation I have with you. I'm like, it gets me so excited because I'm like, we're there, we're at the right place, and again, it's going to work. But for folks that may be thinking like, well, I missed it, or like, what are your thoughts there?
I mean, when I first bought Bitcoin in 2014, I actually felt like I was late. I'm like, oh, I missed it. And then I was like, yeah, okay, I'll just buy a little. You would not believe how many conversations I've had with people in 2015, 16, 17, 18, all the way through. It feels like, it feels like I'm too late. It feels like I missed it. Crypto today, 2.3 trillion, is roughly like 25 basis points of all global assets.
Overall market cap, 2.3 trillion.
Yes.
Yeah.
All of crypto today, all the developers, all the people working in the space, all this, 2.3 trillion, that's like 2/3 of the size of NVIDIA, which is a single company, right? That's one company compared to hundreds, thousands of companies, protocols, developers. It is certainly not too late. And I think there's a debate. Are we in the bottom of the first inning? Are we in the third inning? I don't think it's a debate. I think we're like probably in like the bottom of the first, or like maybe the top of the second with like 0 outs. But we are very, very early. And what's interesting is we're still like 40% down from peak crypto asset market cap in late 2021.
Yeah.
So we're nearly 3 years removed from peak levels.
Wow. Yeah.
Despite the fact, but think about everything that's like happened over those 3 years. BlackRock has entered the space.
Yeah.
BlackRock now is the largest Bitcoin ETF in the world, $25 billion. It just launched. It launched less than a year ago. They have the largest Ethereum ETF in the world. They have a tokenized treasury product. Larry Fink has said that tokenization is the next big leap forward in
everything will be tokenized.
Everything will be
everything.
tokenized.
I mean, we have evangelists in Larry Fink now.
Right. And it's not only BlackRock, it's Fidelity, Wisdom Tree, Invesco, VanEck, like the list goes on. So, and you've seen like a lot of these institutions enter the space in the last 18 months. The number of on-chain wallets that in a typical month that interact with blockchains is roughly 40 million. That's increased every year for the past 5 years. 40 million against a global population of roughly 8 billion is a drop in the bucket. It's far less than 1%.
Yeah, so a couple trillion market cap expansion is kind of like that writing is on the wall. I mean, yeah.
It really is there. And like also when you drill into the couple trillion and remove Bitcoin, everything else is like, 800 billion.
Mm-hmm.
So it's like all of crypto, everything that outside of Bitcoin has the same market cap as like Eli Lilly, which is roughly 800, 900 billion. So there's so much, the technology has gotten so much better. There's so many more institutions in the space. I think from just, if you compare like the fundamentals of everything going on in crypto to the valuation, I think arguably there's never been a better time, because when I entered crypto, or when I launched ParaFi, there were like existential risks to like, would crypto work? Like there really wasn't anything outside of Bitcoin that had product market fit. Today, actually crypto market cap has only doubled since I've launched ParaFi. No, ParaFi is up far more than that.
You would have felt a lot more comfortable in 2018 if Larry Fink was on CNBC talking about Bitcoin back
exactly.
in 2018.
But there was like risk that the entire industry would go away. Now the industry has hit this escape velocity. It's global. Large institutions are involved. Large companies like Stripe, Visa, MasterCard, almost every Fortune 500 company is doing something in crypto.
Yeah.
So it's the space isn't going away at this point. It's just a matter of how big it gets. But again, like the market cap has only really doubled since 2018. It's 40% off peak. So I think just from a risk return standpoint, it's a very special time in my perspective. And then a lot of the undercurrents that make crypto interesting to begin with, whether it's like debasement of fiat currency or censorship of big tech or privacy, all these issues like are bigger issues today than they've ever been. So the kind of first principles analysis of why this technology is important like rings more true today than I think it has at any point in its history. It's always difficult to like get involved and take the leap in, but what I find is most of and we have around 450 LPs at ParaFi, from very large endowments all the way down to high net worth individuals. But what we've seen is usually once people get exposure and kind of start to like learn and understand the technology, like they want more exposure.
Yeah.
Like 90% of the time they want more exposure and they get converted into believing this is important and they start using it. Maybe 10% of the time they capitulate and sell. But there's a positive correlation to the more time you spend with this technology, the more likely you are to appreciate the importance of it. Once you do your research, the people that have done their research, I've yet to meet anyone that has done like more than 20 hours of diligence on this technology and has come away bearish.
Yeah.
Like most of the talking heads, whether it's like, Nouriel Roubini or Charlie Munger or like even Jamie Dimon, they really haven't done like deep diligence on the space. Like they're kind of speaking at a high level and you can tell like they're saying things that are factually inaccurate.
Yeah.
So, it's still contrarian. I mean, this is contrarian.
Yeah.
By the way, AI is not contrarian. AI is very consensus from an investing standpoint. Like everyone recognizes it's going to be big. I think AI is going to be big, by the way, but I think usually special investment opportunities are contrarian by nature. If something's consensus, well, then that's reflected in the price. So you kind of want to be, if you are interested in outperformance or alpha, you have to enter into something where it's contrarian. There are risks involved. I was at TPG on the investment team when the firm looked at the Uber Series B round, and there was a discussion around like, will governments ever allow ride sharing? Like the taxi unions will always push back.
Yeah.
Like there was all this regulatory risk, and there was a lot of risk there. But with Uber, like they ended up winning the regulatory battle city by city, country by country, because ride sharing is like truly a 10x better technology than hailing a taxi. Yeah. Like it's just a better technology. And same with Airbnb. Like people said, oh, like the hotels will never allow it, cities will never allow it. Like it's actually like a better user experience. It's a better technology. Yeah. And so I think like better technologies always win over the long term. It's like kind of pushing a beach ball like underwater in a swimming pool. Like the gravity is like it rises to the top. And so Uber, Airbnb ended up becoming $100 billion plus companies because they just offered a better technology. There was risk early in their life cycle, but that risk created the opportunity. If there was no risk, like everyone would have invested. So, and it's a bit of a tangent, but I think it really applies to crypto because I think a lot of investors are looking for just like, hey, I'll invest in crypto when there's zero risk. Well, when there's zero risk, at that point, it's consensus, it's mainstream, the alpha's gone.
Sure.
But right now there is alpha because many people don't believe in it.
Sure. So as we wrap here, yesterday at Investor Day, you talked about a number of predictions for 2030, and we could do another 3-hour podcast, right, going over all of them. But just for the just for one, we've talked about Bitcoin, and I think that's kind of a proxy for market cap growth right now, at least. And you did make a prediction on Bitcoin 2030. Are you comfortable talking about that on the pod, or is that leave that at Investor
No,
Day?
I think I'm comfortable. We can always edit it out.
Yeah.
It's, so Bitcoin, our prediction was that Bitcoin would converge to gold parity by 2030. Gold is a $17 trillion market. So if you look at all the above ground gold in the world, multiply it by the price, it's roughly 17 trillion. Bitcoin today is a roughly 1.2, $1.3 trillion asset. So if you look at Bitcoin at gold parity, it's a little over $800,000 per coin. I think that Bitcoin, if you looked at Bitcoin and gold just from first principles and say, what's better as a long-term store of value? I think it's very difficult to come away with an intellectually open approach to that question, saying gold is better. And I think what you're seeing is, gold has a 5,000-year operating history. I don't want to disrespect gold. It's been like 7 to 8% compounder over the past 50 years. But gold is mostly owned by the boomers, and the boomers are transferring $38 trillion over the next 20 years to millennials and Gen Z. Largest wealth transfer in the history of civilization, even inflation adjusted. 2/3 of millennials and Gen Z prefer Bitcoin to gold. So just that demographic tailwind alone will be very powerful. But I think it's very likely that Bitcoin reaches gold parity. And I actually think, but I think the real boss, the big boss, is the US dollar. Mm-hmm. And with the government deficits that we're running, which under both administrations are, $2 to $3 trillion per year, with our current debt load of roughly 36 trillion, the annual interest rate on our debt is 1.3 trillion. We're getting to this point in kind of we're kind of circling around the drain, where the interest on our debt is so meaningful that it's difficult to see a path to balancing the budget. And so our debt to GDP, which is now around 120%, continues to creep higher. And it's mathematically very difficult to look into the future and see a scenario where we're able to raise taxes, cut government spending, and drive enough GDP growth to get that number to a more healthy spot. Yeah. So, actually just in the last 90 days, we've incurred another $1 trillion of debt at the national level. It took us over 200 years as a country to incur our first trillion of debt. And now we incurred $1 trillion in the last, 90 days. So I think Bitcoin is an escape hatch for people that want to leave fiat currencies and hold an asset that has a fixed supply curve, where there's roughly 19.8 million Bitcoin in circulation. There will never be more than 21 million. Yep. You're reserving your spot in the parking lot that has a limited number of spaces. So institutions are reserving their spot. We're all reserving our spot. And I think that dynamic is just powerful. I think it's just math at the end of the day. I really think it's math. Yeah.
And that's how you could come up with match parity to gold market cap. Here's the math. It's
right, exactly. It's just math. And but then if you say, hey, it gets to gold parity and it can take meaningful market share from the dollar, or from other, high inflation fiat currencies in developed markets, which we're already kind of starting to see, the numbers can get much, much, much bigger. So I think there's long-term, 100x upside left in the Bitcoin trade. Yeah. Now it could take longer than 2030 to kind of realize that, but I think the the numbers are there. And look, Bitcoin's been the best performing asset class of the past 15 years, or the last 10 years, or the last 5 years. Every time scale, it's been. I said best performing asset class, which is probably not the right terminology. It's an asset.
Yeah.
But it's been one of the best performing assets.
Yeah.
Yeah,
and somehow ParaFi has found a way to outperform Bitcoin since inception in a pretty considerable way, which is just fantastic.
Well, I think it just comes down to like we have domain expertise to look around the corner and see trends early, and we have credibility to give money to the best founders in the space. We have deep research and analytical abilities given our vision across the full stack. We have ParaFi technologies. So all these things are advantages that we built that are kind of in our control. There are obviously things that are out of our control. That's why we don't try to time the market, because a lot of people try to time the market. But if you're sitting on like a 10 to 100x opportunity, why try to like time the market? We just want to partner with the best founders, back the best companies in the space, and invest in things that are actually moving the technology forward, because that's actually sustainable. We have an edge there. So that's what we'll continue to do, and hopefully continue to outperform Bitcoin.
Well, Ben, this has been great. Are we missing anything before we round out?
I don't think so.
Okay. Yeah, well, this has been great. The relationship that we've had, my firm, with you, and just our real friendship and partnership has meant a lot to me, and to see where you started and then where ParaFi is today, and just being like there yesterday and really seeing that IRL, and it's just really special. So thank you so much for doing this today, and I'm really excited for what we can accomplish together in 2025.
Yeah, well, I'll throw it back at you. You were very early to see the potential in this technology, but also see the need for an institutional firm who is approaching the space in the right way. So you were very early, and now you're doing great work in terms of helping institutions understand the space, understand the asset class, and bring that capital in to this alpha opportunity. So, thank you for everything.
Absolutely. Just getting started.